Hello guys. How you all doing? I'm good myself, and yeah, I just want us to look at Nasdaq today. This is going to be our second chart. Remember, already I did analysis on gold. So if you're new here, make sure that you subscribe and you check out the other videos because this is where I share market analysis. Here we are just doing pure price action, meaning we are reading the structure based on what we make our decisions based on what we are seeing, based on the candlesticks, ne? So if you are interested in this style of trading, you can always hit me up on Telegram, and then I'll get back to you. We'll take it from there and see if we can get you into the mentorship. So this is the number. So let's get started. So make sure that you stay with me throughout because the structure here right now is very interesting. So I'll show you as to like what is most likely gonna happen from here. From the last time when we did it, we talked about it pushing to the downside, coming from the higher time frame structures and stuff like that. Now we can see the structure has definitely changed. So where to from here? That's the question that I'll be tackling. So make sure that you sit back and enjoy. So let's get started. Let's just remove some of these drawings because you know what? Usually when I do an analysis, I start with a fresh chart. I remove everything and then we always go to the monthly. So if you see this horizontal line, it's basically our monthly resistance, and always we need to know where the support is at. So this is the support. Our monthly chart pushed up, but it didn't really get into the monthly resistance, but already it's feeling the heat is coming back down, but it's we still have a couple of days. This can end as a pin bar. If it does, then it's not gonna look good for the buyers. But if even if it ends as a pin bar but doesn't close, or doesn't, the next candlestick doesn't go below the range of that, they can still go up and invalidate the pin bar and go up and reach what, the resistance. But we'll see how it's going to unfold. So on monthly, we don't need a lot of stuff. We just need to know where the nearest support is at and when the nearest resistance is, so that we can see where we are in relation to the two. So you can see that the price came from to the support. We've been talking about this one ever since when it was inside the support, saying that here this is where the price is going to struggle to pass, and it is most likely going to go up into the nearest area of resistance. We're referring to this one, and it did go up, but it didn't get all the way to the top. Now it is in between. It was there like 50%, right? Meaning it can go down, it can go up. If you're trading on smaller time frames, if you get a chance to go down, you can trade to the downside because of what, you are still in the middle. So if you were somewhere here, you wouldn't feel safe in taking what, trades to the downside, because already there's a pool of buyers here. It's their territory, it's a support. So you're trying to fight that with a smaller time frame setup here, where you're trying to sell, is not a good idea, because once these orders are collected, the price can just jump and take you out like you didn't even exist. So let's check what's happening on weekly. Is there anything different? So this one, remember, it's from monthly resistance. It marks where the monthly resistance starts. So on weekly, we had a trend line here. We've been talking about this, I don't know for how long now, so I'm not gonna waste time. But for those ones that are new, when the price was moving down, because it gave us a lower low, we had our trend line there. And then from the point when the price made this point, or this swing low, the price then pushed up, and it pushed up like that. And then when it pushed up, that's when it broke the trend line that we had here, right? And it even broke the area of what, of resistance. This was the nearest area of resistance. Once it was taken out, that's when we marked this one as the nearest area of resistance on weekly, which is inside what, a monthly one, because remember, a monthly one starts at this 14246. So there's the nearest area of resistance. We still have a space to go there, right? Just because now the price is pushing down does not mean it has to go down and all the way down like that. Because remember, when the price, at least we know where it's coming from. We know this was an area of what, support on monthly, area of resistance is up there, right? But what we know is that usually price does not move like this. It does not move like that. Yes, on a higher time frame it can look like that, but when you're moving to smaller time frames, you're still going to find small trends within that. It was doing that at some point. So that's why if you are trading higher time frames, you need to be very, very patient, because of what, you will be trying to hold even during deeper pullbacks like that, because if you're trading higher time frames, this didn't change your structure that much, you see, which is why you need a very big account for you to trade a zone on weekly or on monthly. So here what we can take is that this was our trend line, this area of support. I said in the previous video that it's a very strong area of support because of what it did. It is located inside the monthly one. Remember the monthly one, this one here, this one. Remember the weekly one is at this swing low here. So that this weekly one is inside the monthly area of what? The monthly area of support. And because of what it did, it pushed up and broke the resistance, and it broke the trend line that we had. So it's a very strong area of support. Should the price come back here, you are more than welcome to buy and hope that the new impulse will then go up and hit the resistance. Because remember, now when we're coming from here, we didn't hit the resistance, we still have some gap, so meaning the buyers can still find the strength to push up. So we're not saying the price is going to do this into that. It's possible, but we are not saying that. We are saying, should the price come here, we are going to buy it because of we know where we are, we know what this zone has done. So which is why if the price comes back to it, there is no way we would want to miss that trade. You see, if it comes back here, we will take a buy and be targeting that. Even if you're targeting that area of what? That area of resistance, you need to set your TP1 here, because no one knows why the price turned here. If you look left, there's nothing. It just turned in the middle of nowhere. Remember, the price can print out new areas of support and new areas of resistance anywhere on the chart. We just use the ones that we had before to make our decisions, but it doesn't mean that if resistance is up there, we are coming from the support, we can't turn in between and go back to the support. It's very possible, which is why when you have a trade running, make sure that the way you manage it should be fine. Which is why even the guys that I have in the mentorship, I always show them, like, I try by all means to make sure that I teach them from the basics. You see, when you join the mentorship, the first lesson, especially if you've been in the game for some time, maybe you're not very consistent. That's why you want to up the thing, pump up the skill that you already have. So I will start you with the basic stuff, just for one lesson. The lesson number one is going to be the basic stuff, because I do believe that basics, I don't teach you everything with regards to the basics. I teach you the ones that I feel like they're important, what I feel like is important for you to know. Anything else is just noise. You shouldn't entertain that. So from there, that's when you're going to build up into the more complicated or more complex concepts. But even those ones, for you to understand them, for you to trade them better, you still need to know those basics that I taught you in lesson number one. So if you are interested in that mentorship, remember I gave you this number at the beginning of the video, 383. So this is the number that you can contact me on Telegram. So let's continue. So this being your TP1, we're saying that we don't know why the price turned here, because it doesn't have any trace to the left. So which is why when it comes here again, if we get a buy, we need to be worried, because this area, it managed to push the price down and cause it to go all the way back. So what is it with this area? We don't know. Which is why when you get here, we can't just neglect it. We're gonna use it as our TP1, and then the main zone on monthly, it can be your final TP. That's if you're trading this time frame. You see, that's how you do your thing. It's not important. Every concept is important. You knowing that you're supposed to be searching for buy trades, but yet you don't know where to search for those trades, and what is it that you should look for when you're searching for those trades. You're gonna end up, yes, you know you're supposed to be searching for trades, but you're gonna end up searching for them at the wrong place, and you lose a trade or a setup or an idea that you could have won, simply because you are missing some concepts where you need to know what to do, where to do it, and how to do it. And also, when you are in the trade, you need to know how to manage it, where you're going to exit, when is the right time for me to move to break even, when should I keep on dragging the stop loss up and stuff like that, or when should I maybe consider closing my trade manually. Those are some of the things that are often people they take for granted, but you will realize that most of the time, or sometimes you will lose a trade where you feel like, but this trade, I remember it was up there, I had my profit running. Now it came all the way down and took me out here with like zero profit. What is wrong? What is wrong? You see, that's where the trade management concept is very important, which is why, the course that I put together, I made sure that I tackle each and every aspect that I feel like you should know as a trader. Otherwise, you'll be good at executing, but very bad with managing the trade, or very bad with setting your take profits. Then it means you're going to suffer now. You can be good with analyzing, but you still don't know how to execute. You see, you need to understand all these concepts. So that's all that we have here. From here, should we go down here? Guys, we're not gonna miss it. Should we go down here? We're not gonna miss it. That's if you're trading this maybe as your execution time frame. So we need to understand the bigger picture, so that when you're going down to smaller time frames, we still need to say, oh, I remember monthly said this, I remember weekly said this. So if H4 is saying this, how is that related? Or how, if I compare that to what I saw on weekly, can I make a decision to say this is the type of a trade I'm going to take? You see, because if I just open my chart and go straight to H1 because I want to trade H1, I open H1, maybe I see a pin bar, and then I start executing based on that pin bar. That's a horrible analysis you can come up with. You cannot just open your chart and go to H1 and start making trading decisions, because you still need to know the bigger picture so that you know where you are. To say that if my H1 is saying I must buy, but I find that I'm inside a weekly resistance, where am I buying to? Because already it's like I'm inside a pool of sellers. So I'm trying to find that with just like a small pin bar that I saw on H1. You see, it's not a good thing. So which is why all these concepts, they must link together. So that's all that we have on this one. You still have enough space to go there, but you can still turn and have like this as a small pullback and go to the main target. Remember, the main target is to reach that monthly area of resistance, but we don't know whether it's gonna go like this or it's gonna go like this first. We don't know, but I doubt you will want to break this monthly. Remember, this is inside the monthly support. I doubt it will break that, unless if there's something big, like really big, happening fundamentally. That's the only time when the price can, violate the strong higher time frame structures. Otherwise, it will respect them. Then you see there's something happening in Ukraine and all the stuff, then that affects, the sentiment, the market sentiment. You see, that's when you can have even your greater things being broken. Like if you check here, generally this is moving up, right? We had COVID. This was somewhere when we had the lockdowns and stuff. Then this is when we started with the invasions. You can see what happened. You see, unless if there's something big happening, these are stocks, they will continue moving slowly to the upside. You see, like if you check here, this was a very strong move to the upside. Something happened here. Something happened here. You see? So let's go to daily and see how is the structure this side. This is where it gets interesting, because I do believe that most of you here, you don't trade weekly, you don't trade monthly. Maybe you start with this as a higher time frame that will give you the direction to say that, oh, because my daily is saying this is my bigger picture, whether I trade on H4 or H1, I will use the daily as my bigger picture. So here what we can see is that the price was moving up nicely, and then we had this as a swing, pause, pause, pause. And when you're drawing a trend line, you need the swing. So meaning the recent swing lows that we had when we were going up, they were here. This was your bullish trend line, and it was broken from this point. This point was a pause, and then we moved all the way down and broke. When you're going up, we had this. Let me show you. We had this market pause. That one you couldn't take because of what I even explained in the previous video, to say that when the price was coming back to that one, you couldn't take, because when we have a zone and you're going up, we don't want the next candlestick to come back. If it comes back, we're not going to trade it. But if you go up and then maybe go up again before coming down, then we can consider taking trades from this. But in this case, this zone, we went up with this candlestick, the next candlestick came back, we can't take that one. It's not a good zone, because there is no like a proper imbalance. You're going up only to be swallowed in the next move. No, we don't want that. So it means we moved our focus to the next one. This was the next zone. Let me show you what happened here. Let me show you something. It might differ, from broker to broker, but the candlesticks will be relatively the same, right? And this was the next zone. We know that the price, the trend line is still not yet broken. At the time, it was not yet broken. And the price is approaching the next area of support, which is around the trend line. But here is a problem. If you're trying to take a buy from that, When it was coming down, yes, you could look to buy. Like if the price had went inside with this candlestick, then you could buy. It would have went with you up there. Surely that's more than enough, because this is a daily. It's more than enough for you to move to at least break even and stuff like that, like when it comes to managing the trade, right? But in this case, look what the price did. It came here, it missed the zone. If you can see here, we didn't touch the zone, right? It missed the zone. So this is what we don't want. When I have a zone and I want to buy from it, I want the price to come back smoothly, so that it doesn't have anything when it was coming down, so that my profit margin is not compromised. Because if it comes and then it forms something here, it means when I'm trying to buy, I need to consider that as my first TP. So if this point is too close to where I'm trying to enter, it means now my risk to reward is going to be small. So I can't take a trade where I'm risking 50 to make 50. But if it came smoothly with nothing, it means we were going to target that. It was definitely going to be at least 2:1. That's what we want. So in this case, because of what happened, let's change the color. Because of what happened here, if it had touched before going up, you could take that. But because it formed this, it's more like someone is coming. You're expecting the sellers. You are trying to buy. So for you to get your chance, the sellers must push into the zone, because without the sellers, you won't be able to get your buy trade. The sellers must do this, right? But they mustn't be too strong, because if they are too strong, they are going to defeat you, and you don't want that. So meaning when they are coming, you expect them to just come with a normal move, just come down, and then you enter, and then you expect it to push up. But if you see them coming, they were going up, they are coming before they could even activate you. Look what they do. They form a camp here. They form a camp. They camp here. They sort of like they build a house here in front of you, so that when you are trying to enter, already there's a lot of them here. So they're going to be fighting you. Then they can defeat you. But if they're just coming there, usually when the price is approaching an area of support, some people that were selling, they're exiting. The momentum is dying out. You don't expect the sellers to be a lot, and then the bulls, if they take over, they've got high chances of pushing up. But when you see them coming down, they build something here before activating you. This is not a good sign, which is what we had here. So I hope that makes sense, because that's something that I explain in deep details the market analysis that I make here, or even in the mentorship and the one-on-one sessions. I always show them about this, which is like your profit margin is now compromised. So there you couldn't take that. And then look what the price did. It went down and broke what? It broke your trend line. But now we broke first support, which was this one. And then we broke second support, which is the one that I marked. And then we broke bullish trend line. You can see that the bulls, they don't stand a chance, because on this time frame, we broke their support, and we broke again their trend line. That's a lot of a loss. We were just demolishing all the key structures. So meaning this time frame is definitely bearish. But if it is bearish, where could it be headed to? Like where could it be? Where are we most likely gonna find as our next area of support? Because remember that when you're trading, as much as you're going to the downside, it does not mean this has to go down like this forever. You need to know where it is most likely going to struggle to pass, so that if you're to get trade ideas, you know where exactly to search for those ideas. Because of what I told you, that knowing that you need to take a buy trade, it's not enough if you don't know where you're going to be searching for that buy trade. You see? So here we know that we are bearish, but do we have enough space before we can hit the next opposing level or a support, where we can say that if I was to take a sell, this is where I would exit, because this is a buyer's territory. The sell trades, they can sort of struggle to pass here. You see? That's what we're gonna find out here. So where in this time frame, we know the trend line was there, support broken, trend line broken. Then where is the next support? We had this as the next support, which is also what? Broken. So we broke 3 support areas and a trend line. Right? That's a lot. The buyers have lost a lot. They've lost a lot. So where is their next area of support? Because always we need the trend, the zone below, which is a support, and the zone above. So that if I was to get trades, let's say for instance, I was to get trades here around this area, I'm going up. I need to understand that this guy here is my next area of what? Resistance. He gave me a move down. He gave me a move down that broke the trend line, that broke the support, that broke the support. It's a very strong resistance. Should I get a trade to go up, I need to exit there. Until he's taken out, then I can know that the sellers, what they had, their camp here was violated, then the bulls have got full control. They've got full control back. You see, you don't have to predict that something is going to be broken because you're going to be disappointed. Rather, you wait for it to be broken, or if you already have a trade, when you get there, you exit. If it's broken, you search for trades again in that direction. It's not a loss, other than you holding a trade saying, it has to be broken, and then it doesn't, it holds. You knew that that area is going to be, the price is going to struggle to pass, but you just decided not to close your trade. Take your profit. You don't have to be greedy. So in this case, the next area of support, because we're saying this one has been taken out, the next area we got is this one here. Let me mark it for you so that you can see it. You can use this candlestick. Yes, we are inside what? An area of support. But what we understand about that area of support, the first thing, which is an obvious one, is that it is not fresh. Because it was formed here, we were going up nicely, the price went up, it stayed there before coming back. You could take this one, tested there, it went up. Now this is a second touch, so the level is not fresh, right? And again, another point that you need to note is that not in line with momentum on this time frame, but it is in line with momentum of what? The higher time frames. So what I mean is that because this time frame we said it is bearish, this zone is bullish, so it is not in line with the momentum on this time frame. The structure here is bearish, this zone is bullish because it's a support, so that's a negative thing. But it is still a support. Just because it's not fresh, which is not in line with momentum, does not mean it has to be broken. It can still hold the price and push it up. You see, that is why you have to pick your 2 time frames or 3 time frames that you're going to focus on. When the price hits the higher time frame level, you say, let me see how it's going to react, maybe I can get trades. Same thing here. If I'm trading daily and H4, then I get reasons to go long, you need proper confirmation. That's something that you need to wait. Proper confirmation before you can go long. But you're not wrong in trying to search for trades to go long. It's only a matter of saying, how am I going to do that? What are the rules? You see, that's something that I outlined with the guys there. So just make sure that in the mentorship, just make sure that you look for confirmation before you can go long. But the area, it's a support on daily. And yes, we understand it's not fresh, but it is still a support. It doesn't mean it has to be broken. So let's see. That's all that we have. We understand this is the nearest area of resistance. This is the support. If you're to get trades, you'll be pumping up. When you get there, you're out. Because this could be just a break of a trend line, retest of that zone and trend line before pumping to the downside until we hit that main weekly zone. If you still remember when we said, should it come back here, we are definitely going in. Maybe we'll do like that, for instance, which is why if you get reasons to go long and you decide to go long, make sure that you exit. So this is the last time frame that I'm doing, which is our H4. Our H4, the trend line was here when we were going up, and then this was our nearest area of support. It was broken the first time when the price came to the zone, because the zone was here. We tested it there, and then we went up like that until there, right? Which was a good trade because of what? This was not a break of a trend line. You need to understand the rules. You must have rules to say, how do I consider a trend line to be broken? You must have rules. And we tested that, we're still bullish. You could take that, it went up. When it's coming for the second time, it is no longer fresh. You can't just go in. You need what? Confirmation, which is what I showed you even on daily. You need confirmation. So when the price came back again, it broke this zone and it broke the trend line, meaning it was bearish. That's when the bearishness started. Then this was sort of a retest to go there, and then you could search for trades to go short. But when you're going short, this has to be your first exit, because you don't know why the price turned here. So when it's coming again, you need to exit there. Then the second exit could be at the next zone on this time frame or a higher time frame, daily or weekly. And then in this case, we know we are now inside a daily zone, and then you can see the price is sort of forming weird candlesticks, is struggling to go past that level. Why? Because it is inside a very higher time frame level. It is not in the middle of nowhere. You see, it's somewhere. So which is why you need to look for confirmation there. Then you can go long. But should the price break like this, this is going to be your nearest resistance. Then you can try and catch trades from there and hope that it will go all the way down to the weekly zone. Hope that it will go there. So that's all that I have for you guys. So that's what you can look out for. If you're trading H4, look for confirmation there. But because H4 is your execution time frame, the first exit area should be there. The second one will be the one on daily. The first one will be there. The second one will be this one. So remember that H4 level is this one, around there. Then you can exit TP1, TP max, because we say this one did something and it's your higher time frame. So that's how you'll be trading this one. And the trend line here, which is the last thing that I'm gonna mention before I end this video, it's gonna be that your trend line is here. So you're gonna exit there. You see now the price is gonna struggle again because of what? This is your TP1, which is why you can't just buy and act like you don't see that there's a trend line here. You see, so the price might struggle to break there. Should it go up, then even selling here, it's not good because of what? You are coming from daily. This is H4. So where not the only time you're allowed to sell from here is if the price eliminate this, go slightly lower than that so that it sort of opens room, then you can try and sell from this and hope that it will go down. But buying, you can do it because you're at a higher time frame level. But because the trend on that time frame is to the downside, you need proper confirmation. It's up to you what you take as proper confirmation. And then yeah, I'm gonna end it like that. And I hope you have learned something. And this is my Telegram number, and then you can always hit me up that side, and then we see if we can get you into the program. And we are starting, I think we are only left with 2 guys. If not, whether we get them or we don't get them, first week of the following month, we are getting started with the classes, where I'll be teaching you all these concepts from basic stuff. We build it up until a point where you can approach a chart like the way I do, so that when you open a chart already you know what to look for. Because if you just open a chart and start attacking on the smaller time frame where you want to take the trades, you're going to miss out on a lot of key information, which is where you will take a loss because of what? Maybe you are trying to buy inside a higher time frame resistance. You see? So if you are interested, you hit me up on this number on Telegram. Then we'll take it from there. But otherwise, don't forget to like, guys. Like, it doesn't cost anything just to like the video so that it can reach more people. And again, you can recommend the channel to your friends if you feel like the content that I'm sharing here is worth their attention, or maybe they will learn something from it. You can just share and sort of recommend the channel to them. All right, I'll see you guys in the next video. Sharp.